Hi, this is Jeffrey Kurt Financial Group. Today is Wednesday, October 1, 2025. We made it to October. Halloween will be here in a couple of weeks, and right after that is Thanksgiving, Christmas, and the holidays after that. It's been an incredibly fast year, it seems like. So today I just want to review the third quarter and year to date to give you a sense of what went on in the third quarter for the stock market. So the Dow was up 5.2 in the quarter. S&P was up 7.8 in the quarter, 11% quarterly gain NASDAQ. But the real leader in the quarter was the Russell 2000, the small cap, which indicates maybe a broadening of the overall rally. Year to date, the Dow's up around 9%, 13.7 for S&P year to date. NASDAQ leading the way 17%, and the Russell is up 9% year to date. Next, we've got the government shutdown, and we've got some jobs data that's coming out, this week. And, from the perspective of the markets, I don't think the government shutdown is really having any impact. I think the market's kind of more focused on interest rates, inflation, the economy, and, those such factors. Now, if the government shutdown continues for a while, maybe the market, becomes more focused on it and more reactive to it, but I don't think it's really a case now. What I do think is a case, as particularly today, is the JP Morgan collar trade. I mentioned that on Monday, and I've got another chart here for you with a picture of Jamie Dimon, who's the chairman of JP Morgan. I don't think Jamie Dimon has anything to do with the collar trade, but they put him on this chart, and I thought this is kind of useful for those keeping score at home. It kind of gives you a sense of what goes on in selling and buying puts and then selling calls to finance it. Those levels are there. What this means, because options and this kind of derivatives are not easy to understand if you're not dealing with them all the time. The significance of this for this particular quarter is S&P 500 7,000. That's the target. That's where this thing is set up to break even, and that can be a magnet for the S&P 500 into December 31. Again, this is set now. It doesn't get adjusted for the quarter, and 7,000 is a key level that won't expire until December 31. So what's that mean? Again, the S&P closed yesterday at 6688. So if we get to 7,000 in the next 3 months, it's a 4.6% gain, which is really pretty good. And again, the significance of this is from a dealer flow and traders perspective. Algorithms are going to be following, kind of trading off this. And again, dealer flow, as they don't want to be directional, but more so just taking the trades, and they have to be, certainly be aware of this. And what I'm reading is if the S&P 500 gets materially above 6,700, it can be quite an easy path to 7,000. And again, all of this has nothing to do with interest rates, inflation, government shutdown, and like that. But it is impactful, and I think it does have a significant impact on the market and in trading. So wanted to give you that information. We'll be back on Friday, whether government shutdown or not, and we'll try to give you the jobs numbers if they put them out, and we'll talk to you then. Thank you so much. Goodbye.